Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As always, keep in mind that each trade has risk. No one trade is guaranteed to profit. I think we all understand that. So in one way or another, you want to manage risk in a way that makes sense for you. And we'll go over some ideas in that regard using some of the tools that are available in our web trader and mobile app that make the risk management side of things quite a bit easier. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. So real quick, if you're using the mobile app, you can find it in the major app stores. It has the same functionalities as what we'll see in the web trader. You can trade both on the MT4 and MT5 accounts on our web trader and our app using those advanced functionalities. And the app looks and feels like the web trader, and like I said, has the same tools, signals, etc. coming into it to assist you with technical analysis and fundamental analysis. Now, if we log in the upper right corner here, we'll be in the web trader, and you know, when we're talking about fundamental analysis, there are different types of fundamental news that we can look at. You know, there's the kind that's scheduled, that we know what it is, when it will be, like on an economic calendar, and we'll take a look at some of those types of events that are coming up today and tomorrow, and how we might be able to take advantage of some of the statistics that surround those types of announcements. And then we can take a look if there are other types of fundamental news, breaking headlines, that sort of thing, that also can move different instruments, different areas of the markets, depending on what the headlines happen to be about. So let's go ahead and first we'll look at the economic calendar, which is pretty par for the course for fundamental news. But what's nice about our economic calendar is it's got advanced functionalities that allow you to easily analyze the statistics from past announcements. And so you always want to make sure you are on the right date. So you can pick a date range or a single day. And then as you scroll down, you'll see if the actual column is already filled in with a number, then that announcement already occurred. And you'll see the time in your time zone listed along the left-hand side and the country for which the announcement is for. And you can filter so that your economic calendar is set with your personal preferences as to what countries you want it to show announcements for, what level of announcements in terms of importance, low, medium, high. I tend to lean towards the medium and high level announcements and leave the low level importance ones off, because those tend to have a bit less effect on the charts. And the ones that have more effect would be the higher end of importance. And so as we scroll down, we'll pay attention then to the prior numbers, the forecast for the current numbers, and how did the current numbers come in, or how do we think they might come in, okay? And so let's go down to maybe announcements that have not occurred yet. So this red line is the current time, and it slowly moves down as the day progresses, as the announcements occur. And so we have upcoming announcements here, the high level ones that are still left. Out of the US, GDP growth rate and initial jobless claims. And the expectation here is that the growth rate will have slowed. Instead of 3.4% GDP growth rate, the expectation is that it slows to 1.6, okay? And so what happens if that comes in higher than expected or lower than expected? You know, you can kind of rationalize in your mind that, you know, if these numbers come in better than expected, maybe the USD would strengthen. If they come in worse than expected, maybe the USD would weaken. But we can confirm if that's been the case in the past using these tools over here. So if I click in particular on the volatility tool, I can see what kind of volatility existed surrounding these events in the past, and what direction did they go, what percent of the time, and I can even qualify it on currency pairings that I prefer. I can pick time frames that I prefer after those announcements had come in, and I can also qualify how those numbers came in, okay? For example, if the GDP numbers have come in above forecast, then it only happened once, and the movement was down approximately 30 pips after 4 hours. Okay? If it came in, and so what that's saying is the USD strengthened if these numbers came in better than expected. Okay, that confirms maybe what you would have thought should have happened. If these numbers come in lower than expected, then it must be the opposite, right? Not always, but in this case, yes. And so twice it came in lower than expected, the GDP growth rate, and the euro rapidly climbed over 42 pips range movement against the USD. Okay, so that's pretty powerful data. Now, it's not a lot of data points. We're looking at 3 announcements, but 2 out of 2 that came in below expectation. Then the USD weakened and the euro went up in the 4 hours after, and the opposite, the one time it came in above expectation, the USD strengthened and had movement down. And the chart looked like a small movement, but it was actually about the same number of pips, 42.5. When it was above, for some reason, the chart drawing looks small, but it also was over 30 pips. Okay, so a significant move. Now, if we're wanting to know, okay, that's after the numbers came in, how quickly did it move? 42.5 pips range movement. So I could say, okay, what about if I see the numbers come in and within the first 5 minutes I get my trade off, then I can see that it's only gone 13 pips. You see 13.75 pips range movement in the first 5 minutes, which means the rest of the 30 pips or so occurred after the first 5 minutes in an upward direction because we ended up 42.5 pips range movement. Okay, so this is an example of an announcement that you can look at the past movements and get an understanding of statistically what's the better way to trade, maybe based on those statistics, if this indeed comes in higher than expected or lower than expected, or for that matter, if it matches the expectation, we could put that in the chart as well. In fact, it hasn't come in matching. The data on that was, I think, 0 times it hit the number exactly. So, usually it's slightly above or slightly below, or largely above or largely below the expected number. Okay? Many times it doesn't hit the exact number. It's kind of hard to predict exactly right. But if this comes in at 1.5, they were almost right when they said 1.6, but that is below the expectation. And since the expectation is already that it would go way down, then that might give the reaction we saw when we looked at the data and the volatility tool. If it comes in at 2% or something, which is significantly higher than expectation, we might also see that opposite movement that occurred in the past under that condition. Okay? And if there are any questions or comments, please feel free to put those up at any time. I'm keeping an eye on the question chat box there. Now, initial jobless claims, that's another big one. It's at the same time, by the way, at the exact same time. Let's see which one has a better statistical effect. Now, this announcement has more data points. It occurs more often. Instead of a quarterly type of announcement, it's more of a weekly or bi-weekly announcement. So we have a lot of data points over the past year to look at, and even over just the last quarter. And then these statistics might mean something more to you because there's more data points. And if you know anything about statistics, the more data points you have, usually the more confidence you have in the statistical percentages from them. So if we say, again, Euro USD, 4 hours after the event, if the jobless claims, now make sure you understand what that is. These are people reporting or institutions reporting the amount of people who applied for unemployment benefits, jobless claims, okay? So this is, the higher the number, the worse the news, okay? Jobless claims, not hiring, but jobless claims. So if this number comes in higher than expected, that's actually bad news. And maybe you would expect then the euro to climb against the USD under that condition. And if the jobless claims come in lower than expected, that's actually means the job market is strong. If jobless claims are lower than expected, so that would be deemed good news, and maybe the USD would strengthen. That's not always the case. It's not always that relationship, but let's see, we can check. Rather than guessing when you see the data come in better than expected or worse than expected about whether in the past the USD strengthened from that or weakened against other currencies, you can check with this tool. So if this came in above forecast, 100% of the time, the euro climbed against the USD. So it's exactly what we were just speculating. We've confirmed it, that if the data is bad, meaning jobless claims higher than expected, then the USD weakened. How do we know that? Because in the past 3 out of 3 times when the numbers were higher than expected, the euro went up. Average range movement of over 35 pips in that first 4 hours after the numbers came out. Not once did it go down in this data when the jobless claims were higher than expected. Okay, and again, that's over 35 pips after 4 hours. In the first 5 minutes, it's only moved less than 10 pips range movement. Okay, the highest one went 19 pips. One went down and one was barely up. And after 4 hours, all of them were up. The one that was 19 pips ended up 40 something pips, 43 pips, and the others were around 8 or 9 pips up, whereas this one was about 8 or 9 pips down within the first 5 minutes. So that's a 20 pip rise there. Was another 20 pip or plus rise on that one after the first 5 minutes, both of them. And this one creeped up slightly, maybe 10 pips after the first 5 minutes. But all 3 of them would have been profitable with that type of setup. Trying to get the trade in after the announcement within those first 5 minutes, holding it for 4 hours after, all 3 of them rose under that condition. Okay, with jobless claims being higher or worse than expected. Okay, what if it came in below expectation? The exact opposite. Okay, look at all the red down, how much bigger the red movements are compared to the 3 that went up. So yeah, it's only 57%. It's a majority down. It's not 75% or 80. So statistically, percentage-wise, it doesn't look that impressive. But when you consider the fact that not only did it go down 57% of the time compared to 43 up, that you also add in the fact that the downward movements were so much larger than the upward movements, you could add the 3 that went up together, and they don't equal this 1 that went down. And then you have 3 others that went down as well. So it's probably 80% or more of the movement was down, and 57% of the time the direction was down, but over 80% or so of the pip movement was down. In the 4 hours after this announcement, if the jobless claims came in below forecast, meaning the USD strengthened with the bad news, or with the good news, and which is what you'd expect. Lower jobless claims than expected means economy is stronger, and so the USD strengthened. Okay, pulling the euro down. Remember the opposite effect when the number was bad news. If the jobless claims were above forecast, then the USD weakened and the euro climbed. Okay, so pretty easy to see the relationship when you use these tools with some of these announcements. And by the way, not all of the announcements have this direct of a relationship. So there are certain ones that you might choose to trade on more often than others. Maybe you have more confidence in certain ones. And certainly the 2 we looked at now have pretty strong relationships in both directions, depending on how the announcement comes out. Any questions, comments to this point? I'll pause for a moment. Okay, and I don't see any questions popping up, but if I do, I will address them as I see them. So these 2 announcements are interesting. Probably I would make a rule that since these 2 are at the exact same time, only if they both come in better than expected, or they both come in worse than expected, then I would trade in the expected direction. But if one comes in better than expected, which maybe causes the USD to strengthen, and the other comes in worse than expected, which shows it causes the USD to weaken, then they might cancel each other out, right? So I might be looking at both of these at the same time And if the GDP growth rate comes in better than expected, which would be higher, and the jobless claims come in better than expected, which would be lower, and both of those happen at the same time, then I would choose to trade. Or the opposite. If the GDP growth rate came in worse than expected, meaning lower, and the jobless claims came in higher, worse than expected, then also I would trade in the opposite direction. Okay? And I'm not saying that's what you need to do, but that's the sort of strategy you can work out with this and be ready for. And what's nice about the economic calendar is you can plan this trading schedule and pick which announcements you prefer to trade on. You can do that over the weekend. Saturday, Sunday, you can be lining up which announcements on each day that you're able to pay attention to and that you have high confidence in from the statistics that we looked at, and have a plan for 5 or 6 or 8 different trades, announcements that you might trade on during the week each week. Okay, and that alone can be a trading strategy that constitutes all of your trading if you wanted to. Okay, but I recommend diversifying. This could be one of your strategies, and then you can look for other strategies as well, and we'll go over some other ideas with fundamental news with the tools in our platform and app in just a moment. We can look at the market buzz as well. But you see there are other announcements still today, pending home sales. Those have been really a focus as well, the housing industry in the US, to get a gauge of when will things slow down further with inflation and demand, in this case for housing, to bring prices down on houses because they're just not coming down, and people can't afford with the high interest rates to buy the high priced houses. And those who bought with low interest rates, they don't want to sell because they don't want to give up their low interest rate deals. And so there's kind of a real slowdown in the housing market in the US, but the prices aren't coming down yet. So it'd be interesting to see what's happening with home sales, and you see the expectation is a drop. It's not surprising with what I had just said about the prices kind of being stuck, and there's high interest rates. There's an expectation of month over month pending home sales to go into the negative, not just not go up, but be less than the prior month. Okay, month over month, and same year over year. Not a huge number, 0.5%, although they expect the year over year number maybe to tick up. So it would be interesting to see how this comes in. And even though it's a medium level announcement, you can see that it has an effect on trading many times. So above forecast, 71% of the time, the USD strengthens. Makes sense. If these numbers are better than expected, stronger than expected, USD strengthens. 71% of the time, look at the downward movement. Only once really was there significant rise up. One of them barely moved up, and all the others had a nice drop. Average range movement over 28 pips. Okay, and again, you can do that game where you check, well, if I get the trade off in the first 5 minutes, only 9.9 pip movement. Okay, these look big, but they're only about 10 pips or less. One of them a little past 10 pips in the first 5 minutes, and after 4 hours, we're talking almost 30 pip range movement. Okay, so again, looks like an announcement, even though it's not high level, that you could get some directionality ideas about based on how the numbers come in. Okay, and we then could go into tomorrow. I don't think we'll spend a lot of time on exact announcements, but I'll just show you that each day there are big announcements. If you like to trade on the Japanese yen, there's a high-level announcement on unemployment rate tomorrow morning or late night, depending what time zone you're in. 2:30 in the morning my time, unemployment rate numbers come in. That's a high-level announcement. You could check the past movements on that. Industrial production, retail sales out of Japan, also likely to have large movement predictability based on how these numbers come in. If you use the volatility tool and look at the past movement. So you can go through, like I said, each weekend, which announcements you're available to pay attention to that, if you check the statistics, convince you that you might have a shot at picking the right direction based on the numbers, and you can build that into your trading schedule. Out of Germany, retail sales, those are big numbers each time, and others, okay? Switzerland, big announcements, France. And if you scroll down far enough, you'll get through the EU, and into some US announcements as well. Okay, high level announcements on personal income, etc. And many times these are the announcements that are more heavily traded, both because the US market is a larger market, but also because some of the larger markets around the world are, people are up and awake by now. And so there's a high volume of trading on these announcements as well. Okay, so you have your chances and your opportunities to have lots of announcements that you can trade off of for fundamental news trading. Now, we can also go to something like the Market Buzz, and you can search individual instruments for what's happening right now. What is the latest news? And sometimes it's hard to keep up, but maybe I want to know, well, what's happening with these larger circles? Why are they buzzing so much? The larger the circle, the more mentions that this tool has found about this instrument online. And so US Bancorp, Apple, some of these are trending very largely. Tesla, so maybe I take a look. We all know about NVIDIA, right? Maybe I take a look at Apple and see, well, what's going on? So, NVIDIA is closing in on market cap size of Apple, if you can believe it, with the stock price surge that they've had. Here, and by the way, this trend analysis for NVIDIA was showing that the increase. A while back, we looked and it said something like 30% expected rise, 25% expected rise in NVIDIA price. And it seemed like a large prediction. Well, it's already come true since then. Here, the trend analysis is saying over 11% expected rise. You can click and get the technical analysis, okay? You can see the support and resistance levels, the price where they're recommending to take profit are these green lines. You can read about the technical indicators that were used, in this case, RSI, MACD. Okay, so the technical explanation is here for this trend analysis. So you can combine the technical analysis picture with what you feel fundamentally is going on as well. And so where do you get fundamental news on particular instruments? Well, right here in the news feed, okay? And so here someone's talking about their portfolio's top 5 performing stocks. Probably Apple is mentioned. That's why it's an article that's listed in the news feed for Apple. So you can click on any of these articles and read part or all of them to help convince yourself fundamentally which way is the wind blowing for this particular stock or commodity or cryptocurrency or whatever it is that you clicked on in the Market Buzz. And you can click on the link. That brings up a synopsis of the article. And if you want the whole article, you click Story Continues, and there it is. It takes you right to the source. Okay, China court rules in favor of Apple in case involving controversial Apple or App Store fees. Well, that sounds like good news for Apple. Okay, you can read the article, find out more about it. And now maybe you have even more reason, if you read a few articles like that, to trust this prediction that you see with the technical prediction. Okay, so you start to combine the different tools that we have within our web trader and app to build a trading strategy where you're combining fundamental news with the technical analysis, finding maybe key price points to shoot for. And when you put that together, that becomes not just one trading tool, but an actual trading strategy with the use of multiple tools. Okay, and by the way, once you start to enter the prices from maybe that technical look and you say, okay, on Apple, and the market's not open yet on Apple, so it's going to tell us that market closed. But if you start entering the take profit and the stop loss, it's going to calculate for you right next to it how much you're risking and what your potential profit will be. And you enter the prices that maybe were listed in that signal where it showed that they suggested maybe you'd take profit and where your stop loss should be. And it calculates your potential profit and your risk for you. And you can adjust the trade size. And there you go with assistance with your risk management as well. Let's use maybe Euro USD as an example. If we wanted to place a trade, let's say we just watched one of the US announcements come in today, okay? Let's pretend it came in better than expected, and we then, based on the past statistics, expect the USD to strengthen. Maybe the GDP numbers were better than expected, or the initial jobless claims were better than expected, meaning lower than expected. And we think, wow, that was good news for the USD, but that means the USD might strengthen based on the past statistics. So let's pretend those numbers just came in. I could have already set up trades in both directions prior to that to get an idea of what trade size I should do for the risk management that I want. So if I know the average range movement from the statistics we looked at was 20 to 30 pips or 30 to 40 pips, whatever it was, then I could have already programmed my take profit if the current price is 108.16. So if I'm selling, I might then say 107.80. Maybe that's 35 pips down within the range movement that I expect from the past statistics in the 4 hours after the announcements. And I could take a look and say, oh, my potential profit over 5,600. That's nice. But then I need to put my stop loss, and I know that some of those went the wrong way before going the right way. And if I'm going to be beyond that range movement for most of them, maybe I need to put my stop loss up 15 pips. So I go 18.30 with my stop loss. And I say, okay, I'm risking 1,875 to try and make 5,655. And then I have to decide, now that I've got my take profit and stop loss based on the signal or based on what we saw in the economic calendar statistics, I know how far away the movement likely will go from the past movements. Now that I have those prices set up, now I need to adjust my trade size so the potential profit and potential loss is where I'm comfortable. So I can go up and change this to one lot, and now I'm only risking 114. Maybe I want to risk 500 or whatever the case may be. So if I put 4 lots, now I'm risking 460. So I can just gradually adjust this until I get to the amount that I think is right. And so 522, 517, it's moving because the market is moving. But if I'm comfortable with this risk and reward setup, possible profit over 1,700, risk around 5 something, less than 1% of my balance, then now I can go ahead and sell. Now that announcement didn't come in yet, so I was making that up. But if it had come in, better than expected for those announcements, then I might be ready to make this move and sell. And I know exactly how much I'm risking and what my potential profit is. And I hope that the statistics carry on like the last announcements, right? If those announcements had just come in better than expected, and I set it off. And if I can win 60% of the time, maybe, or 70%, like those statistics showed, it moved in that direction on the economic calendar, boy, that would be great. And so we can test those strategies, have proper risk management using the tools in our web trade or an app. And maybe you test 5 or 6 different announcements that you like the best, and you do 10 times on each one over the next months. And at the end, you do an evaluation. And you say, okay, which announcements did I profit overall with this announcement strategy from the economic calendar? If all of them, great, then you continue. If only certain announcements came through consistently, then those are the ones you stick with moving forward. And so you can fine tune your strategy that way with the economic calendar, or also with the market buzz articles for different instruments, and see which ones bear fruit the most. And then you start to zero in on what strategies work best for you with the tools that we provide. Okay. All right. I think this is a good place to stop. We've been going for nearly 40 minutes, or a little less, because I started a bit late. My apologies again for a little bit of a late start. If anyone has any questions, now would be a good time before we end things. I'll pause for a moment. Okay, looks like we're all clear. All right, so thank you for attending, and my next session will be next Wednesday. I'm moving my later session from Tuesday evenings to Wednesday evenings, so 6 p.m. UK time, or actually it's going to be 5 p.m. UK time on Wednesdays now, instead of the later time on Tuesdays. And that's the technical analysis webinar. All right, so hopefully I'll see you in that session, and good luck with your trading today and tomorrow. Bye for now.